familiarizing ourselves with how something works will allow us to make better. It will allow us to make more confident and more informed decisions because we know what we're getting ourselves into. This will eventually save us a lot of time, a lot of effort, and perhaps a lot of money or resources because we won't rely on trial and error. At this day and age, it's also very important that, especially when you know where to look at, we can get practically all the basic information that we need. So it's very easy to stalk people. It's very easy to research about stuff. It's very easy to familiarize ourselves with what we want to familiarize ourselves with. And when we already find ourselves familiar with the old school, traditional, conventional way of doing things, we start developing hacks. Hack a hack or hacks. It's a term millennials use to describe the skills, shortcuts, and tricks that people have been using, people have been developing for us to increase our efficiency and productivity. This ranges from the simplest to the more complex tasks that we are supposed to perform. Then, when it comes to our hard earned money, it's also very important to understand the basic concepts. It's also very important to understand your options. We don't want to rely heavily on social media. We don't want to rely heavily on hype. We don't want to rely heavily on just pop culture, especially when it comes to decisions involving our hard earned money. And then there are investing hacks. When you start getting yourselves familiarized with the world of investing, you start discovering that there are shortcuts, there are tricks, and there are just, you know, stuff out there for you to take advantage of, for you to be able to make your investing journey more productive, more efficient, and hopefully more profitable. And for me to make you understand, for me to make you appreciate mutual fund investing hacks, you should know it's imperative that we discuss three major concepts first. Um, uh, Number one being how mutual funds work. It's important that we understand the ins and outs of mutual funds, what makes it a viable investment option, what's in it for you as far as an investor is concerned. And speaking of what's in it for you as an investor, we're also going to talk about how you make money by investing in mutual funds. And then lastly, we're also going to talk about how these mutual fund companies make money. Uh, Again, just so we get to understand it, from a holistic perspective. And then that's the only time after discussing all these basic concepts, how mutual funds work, how you as an investor could make money, and how these mutual fund companies make money. That's the only time we can talk about hacks because we're done with the old school, traditional, conventional way of doing things, investing in mutual funds. So let's begin. Well, mutual funds or investment companies, as regulators call them, pool or gather money of investors with similar or mutual investment objectives. Just so you know, there are mutual funds for conservative investors. There are mutual funds for seasoned, aggressive investors. And then there are also mutual funds for those in between. The investors' money are then assigned to fund managers. These fund managers are professional, licensed experts when it comes to their respective asset classes. So again, um, uh, you talk about mutual funds, fund managers handling money market outlets for conservative investors. You talk about fund managers handling equity laced funds for the more seasoned, experienced, aggressive ones. And then there are fund managers who are specializing in balanced funds or bonds for those in between. And then when they generate returns, they get passed back to the investors in the form of capital appreciation, in the form of dividends, in the form of long-term asset appreciation. Uh, just so you know, mutual funds are legit. Mutual funds are, in the Philippines in particular, it is established under Republic Act 2629 or the Investment Company Act. And when you invest in mutual funds, you are not directly buying money market outlets. You're not directly buying bonds. You're not directly buying listed shares in the stock market. But instead, you are buying shares of the investment company, buying and managing these vehicles on your behalf. Your ownership is represented in NAV PS or net asset value per share of that particular investment company. And then, since you are buying shares of an investment company, mutual funds are regulated primarily by the Securities Exchange Commission or SEC. But they also need to abide by the regulations of the Bangko Sentral ng Pilipinas. That's why it's important that you check SEC's website, www.sec.gov.ph, to make sure that you are dealing or about to deal with SEC registered mutual fund companies or SEC registered investment companies and SEC registered mutual fund professionals to avoid getting scammed. Next, mutual funds are one of the more popular forms of investments, especially for beginners, because it allows Filipinos, it allows us to invest for as little as 5,000 pesos. Gone are the days when you need a lot of money just for you to start investing. I can still remember back in the day, for you to start investing in mutual funds, you need at least 100,000 pesos. You need at least 50,000 pesos. You need at least 25,000 pesos. You need at least 10,000 pesos. And at this day and age, for as little as 5,000 pesos, you can start your investing journey by way of mutual funds. And because mutual funds pool money of like-minded investors together, they allow people to invest in higher yielding outlets that most individuals can't afford to invest in directly. Again, because you're pooling money together with other investors, you come up with a large investment pool, a huge sum of money, and it will allow you to tap into higher yielding securities that just in case you are just going to invest on your own, you won't be able to take advantage of that. And then mutual funds instantly diversifies your portfolio. Just buying one mutual fund will give you exposure to at least 20 to 30 to 40 individual investment vehicles. Mutual funds are also liquid. It's very important to factor in liquidity when it comes to investments, regardless if you're in it for the short term or you're investing long term. It's very important that you factor in liquidity. Mutual funds are very liquid because you buy mutual fund shares without having to look for sellers. You can also sell mutual funds without having to look for buyers. How is it possible? It's possible because the mutual fund company will buy shares from you if there are no available buyers out there, and the mutual fund company will always be willing to sell shares to you if there are no sellers out there in the market. So this is a very important benefit for mutual fund investors. Um, uh, and then when it's time for you to cash in on your gains, it's very important, especially for investors. When it's time for you to cash in on your gains, it's worth noting that your earnings are exempt from capital gains tax. Last but certainly not the least, when you invest in mutual funds, you won't need to spend a lot of time researching. You won't need to spend a lot of time monitoring the markets, doing trades, because these things are all going to be done for you by expert, full time professional fund managers. So, what's in it for you? well, mutual fund investors make money through three sources. So, comparing that to deposits, with deposits you only earn from interest income, uh, which is at currently 0.125% before tax. With bonds, you earn by way of capital appreciation and from time to time coupon payments. With stocks, you earn by way of capital appreciation and depending on the company, dividends. With REITs, you earn by way of capital appreciation and dividends. With ETFs, you earn by way of capital appreciation and from time to time dividends. But with mutual funds, you can possibly earn from three sources. Number one being capital gains distribution by trades initiated by your fund manager. Again, by virtue of having a full-time expert managing your investments, mutual fund investors from time to time also get shares of capital gains from the tactical calls of your fund managers. Capital gains earned by selling securities also increases your net asset value per share as the fund manager take profits from winning positions. Second source would be from dividends. You get dividends because, again, mutual fund managers buy assets giving out periodic interest, periodic coupon payments, periodic cash dividends. So there are funds that periodically give these out in the form of stock dividends. Instead of receiving extra cash, mutual fund investors in turn get extra shares of ownership of their mutual fund. Dividends received may also be reinvested back into the securities that can potentially generate you more profits in the future. And then, lastly, you also get long term asset appreciation. When the underlying securities bought by the mutual fund appreciate in price, the overall net asset value per share of that particular mutual fund increases when you sit on your investment, regularly add shares, and allow your fund manager to navigate the underlying assets of your fund through the market's ups and downs. Now, next topic is how these mutual fund companies actually make money. Number one source would be sales charges. Mutual fund companies make money by charging investors sales charges, which either comes in as front end fees or back end fees, which varies from the size, complexity, and investment objectives of the fund. You also get charged with commissions because mutual fund professionals also charge investors with agents as commission, which is a certain percentage of their clients or you as investors, one time or periodic contributions. You also get charged with transaction fees. There are mutual fund companies which charge clients with transaction fees for subscriptions or redemptions beyond what they're allowed to. So, for example, you're just allowed to subscribe or redeem 10 times in a month, and you go beyond that, you start getting penalized by the 11th transaction. There are also mutual funds which allow fund switching or asset class switching X number of times in a year. And if you go beyond that, you're start going to get charged beyond X for that particular year. Um, uh, this also includes other transactions that the investor may request or instruct fund managers to do, provided that it is within their limits, within their capacity. You also get charged with penalty fees or penalties. We also need to disclose that there are also penalty fees for investments pulled out or redeemed, especially if they're still within their minimum holding period. Note, though, that this is not put in place to make money off of investors. This is put in place to promote the discipline of long-term investing. And on top of all these, no, sales charges, commissions, transaction fees, penalties, you also get charged with fund management fee, which is the default charge of most mutual funds. On top of these charges, you get charged with professional fund management fees, which is a certain percentage of your assets under management or AUM. which is used to pay for the fund manager, the administrative staff, researchers, and other costs of operation of the investment company. So there you go, management fees. Now, these fees make up a huge chunk of the investment companies or the mutual fund companies' revenue outside their own separate investments. But just so you know, just in case you're wondering, is it legit? Are they really supposed to charge that much? Are we really supposed to pay them with those fees? Yes. It is allowed by the Securities Exchange Commission. It's allowed by the SEC, provided for as long as they are disclosed in the mutual funds KIDS or KIID. It's the acronym for Key Investor Information Documents. Transactions, transaction fees, sales charges, commissions, penalties, management fees, the rate at which you're supposed to be charged with management fees, everything should be disclosed in the KIIDS or KIDS. Now, transaction costs in buying and selling the underlying securities is also passed on to the investors. Thus, the term net asset value per share. All right. Now, if you think mutual fund investing the old school, conventional, traditional way is already easy, convenient, and affordable, let me share with you a number of mutual fund investing hacks you should know. The first one being know your options. When you talk about investing, you're not just confined to investing in stocks. Here at First Metro Sec, we allow our clients to also invest in money market funds, bonds and bond funds, direct stocks, equity funds, and the country's first and still the only exchange traded fund, our very own FM ETF, and most recently, REITs or real estate investment trusts. Top of the line mutual funds, of course, by way of FundSmart. Top of the line mutual funds from ALFM, ATR Asset Management, First Metro Asset Management, PhilAm Asset Management, PhilEquity, and Sun Life Asset Management, all under one roof in FundSmart, our mutual funds and UITF portal within our online trading and investing platform. Trick number two, or hack number two, is to know yourself. It's very important that as investors, you know yourself as an investing animal. Many first-time investors end up getting in trouble because they invest without factoring in their own risk tolerance. They just go with the hype. They just go with the flow, which is not supposed to be the case when you're talking about investing your money. They invest on outlets they have been hearing from friends or based on what they're seeing on their social media feeds. We make at First Metro Sec, we have our free online and paperless investor personality assessment test, which gauges your objectives, your very own personality, or your experiences, your sensitivities, and time horizon, so that we can limit your choices from 70 down to about 13, down to about 15, so that at the end of the day, you're really going to be able to choose the right fund for your very own investor personality and tolerance, risk tolerance. As you learn more and become more comfortable when it comes to investing, you may retake this risk assessment test to check if there are other investment options available for you to take advantage of. Then we go to hack number 3. It's important that you learn before you earn. You need to understand what you're getting yourself into, what you're getting your money into before you actually invest. With First Metro Sec's FundSmart, you're able to check historical performance figures, underlying assets, KIDS, fees, minimum holding period, and minimum investment amount. So you can compare and contrast your options before you actually make a decision. But always remember, though, that past performance is never a guarantee of future returns. Hack number 4 is to automate your investments. Again, at this day and age, it's important that we take advantage of technological advancements. It's okay for you to invest manually, but you run the risk of missing out a payday or two. You run the risk of losing track of your investments. You run the risk of losing track of your schedule. If you automate your investments, you're pretty much taking advantage of bots. You're pretty much taking advantage of artificial intelligence. You're pretty much outsourcing uh, scheduling your investments to the system, our system, the best online trading platform in the Philippines at that. Automate your investments. You need to get VIP treatment by automating your investments with our very own VIP or voluntary investment program facility, which allows our clients to invest a fixed amount of money at regular intervals in FundSmart mutual funds. So again, mutual funds from ALFM, from Atram, from FAMI, from PAMI, from Phil Equity, from Sun Life Asset Management, uh, with a fixed amount of money at regular intervals. Together with, apart from FundSmart mutual funds, you may also invest regularly in the Philippines' first and only ETF, our very own First Metro exchange traded fund. So you don't miss a beat. We now go to hack number 5. Hack number 5 is all about not waiting for that time when you have enough. It's very important when it comes to investing to start as early as possible. Start now. Don't wait until you have enough to invest. There's no magic number for you to hit before you start investing. You don't need millions to invest for you to earn millions. Why wait for that moment when you can start investing for your future now for as little as not 5,000, not 4,000, not 3,000, not 2,000, but for as little as 1,000 pesos. Investing helps you build wealth over time. Always remember that. Not millions overnight. Sometimes it's not about timing the market, but your time spent invested in the market. We now go to hack number 6. Always make sure that you pay attention to fees and charges. If you choose to invest in mutual funds by way of FundSmart, forget about paying sales loads, forget about paying commissions, forget about paying transaction fees, and on certain funds, forget about paying pre-termination or penalties. This is because you are helping yourself choose the fund, because you are not talking to an agent, and because you are ordering everything online. You'll only end up paying fund management fees. So again, no sales loads, no commissions, no transaction fees, and on certain funds, no penalties on pre-termination. If you can redeem, you can withdraw your investments on certain mutual funds without getting charged with penalties. Investing in via FundSmart will allow you to make the most out of your money. That's pretty much the gist. That's our intention. We're investor friendly. Instead of getting deductions from various fees and charges, you'll end up investing most of your money. So that's one of the more important hacks that you need to know. So pay attention to fees and charges. If you can save a ton of money by avoiding fees and charges, then go that direction. And again, FundSmart is there for you. Hack number 7 is to diversify, not just diversify. FundSmart does not only allow you to diversify your portfolio by investing in money market, bond, balanced, or equity funds, but it also gives you the opportunity to get investment exposure outside the Philippines by way of our dollar-denominated mutual funds. Hack number 8 is for you to practice minimalism. I am a self-proclaimed minimalist, and this is also one of my favorite hacks when it comes to investing in mutual funds in particular. Imagine being able to invest in the best of the best from the best of the best. That's a possibility given to you by First Metro Sec and by FundSmart. You no longer have to jump from one account to another just to invest. No need to memorize multiple usernames and passwords. You just need to open one very powerful First Metro Sec online trading account for all your investment needs. And you'll be able to build a portfolio with mutual funds, UITFs, stocks, bonds, ETFs, and REITs, all under one roof, all under one account with just one username, by just memorizing one password. All right. Hack number 9, we now go to never stop learning. After you get started, the second hardest part in investing is to stick to the plan. It takes a little getting used to, but once it forms part of your system, you'll think yourself you actually started. By virtue of being a part of the first MetroSec family, you will actually end up being better, and better and better along the way because of our year-round market education programs. So we strongly encourage you to subscribe to our official YouTube channel, uh, form part of our Facebook community, Viber groups for online learning content, announcements, and relevant no-nonsense market updates. We even have our very own market education department as a testament to how devoted we are to building a financially literate Philippines. Which brings us to hack number 10. When it comes to your hard-earned money, you have all the right to be choosy. You dream of driving top of the line cars. You want that top of the line smartphone. And when it comes to investments, you can never go wrong going top of the line. But the thing is, it does not necessarily mean that when it's top of the line, it's expensive. Uh, Especially when it comes to investment options. Start your investing journey by opening one powerful online trading and investing account with the Philippines best broker, First Metro Sec. Simply head on out to www.firstmetrosec.com.ph. Account opening is fast, easy, and convenient because it's fully online and completely paperless. Not to mention our wide array of equally convenient online funding options from Metrobank, over the counter, Metrobank Online, Metro Remit, PS Bank, BDO Online, BPI Online, Land Bank iAccess, credit card, MasterCard, credit card, Visa, credit card funding, GCash, Coins.ph, Union Bank, and 7-Eleven's Click. So again, you have a lot of funding options, most of them online for your safety and, of course, for your convenience. Um, you also need to understand that when it comes to learning, relearning, and continuous learning, we have online learning programs. You just need to subscribe to our official YouTube channel, so you get access to a lot of our online learning content. For the opportunity to interact with fellow traders and investors, we're encouraging you again to join our official Facebook community. And for anything and everything First Metro Sec, please like and follow our Facebook, Instagram, Twitter, YouTube, and Spotify accounts. And there basically there you have it. Mutual fund investing hacks to make investing fun, to make investing easy, to make investing more convenient and more affordable, and hopefully more profitable for you. This all made possible by First Metro Securities' FundSmart, our mutual fund and UITF investing portal embedded within our very own online trading and investing platform, www.firstmetrosec.com.ph. So there's been Andoy Beltran thanking you for spending time learning with Team First MetroSec. And I do hope I was able to successfully share with you what I know about mutual fund investing hacks every Filipino should know. Thank you.